Recording in progress.
All right, let's do a check. All right, let's do a check. Good morning, everybody. All right, happy Monday. So, a little bit of that currency war is continuing. We need to continue to keep our eye on that through the day. That was a little bit of the catalyst last night. On Friday, there was two market-saving events that caused that absolutely beautiful rip to the upside. Hope you guys got to take advantage of it. So today, looking at the finance juice, which is where I like to start. It's not the only place out there that offers this kind of information, but it's free and it's relatively quick. If you don't use it yet, I would recommend starting an account. It's free. It doesn't cost you anything to open an account, but the benefit you get out of it is that this is a news aggregate website, right? It's grabbing news from a lot of different sources. And if you're not signed in your account, every time you come to this page, you have to weed through what it's getting its news from, the news sources. But if you open a free account, you can turn off some of those sources. This is where I like to go to see who's on the docket to speak today. And then they do these market wraps when our market closes, when Asia closes. And even technically, even though Europe's not closed, they know that Americans are, coming in, kind of getting ready for the day. And they do Europe early, which I really like that. So we do have Yellen talking today. She very often says things that manipulate what's going on with the dollar. So pay particular attention to where she's talking today. It's 10 o'clock. And now, got to be careful when you're looking at time frames on finance juice. It's not always going to be the time frame that you think it is, right? Like I'm saying 10, but that very well could be 11 o'clock, which would put us into lunch. Just a real quick, I get asked about this cumulative tick that I use all the time. It's a question that I get constantly. And I took the time over the weekend to write a blog post, a more detailed blog post, because I already had a post written about it, tick and C-tick. But now this one is specifically going into how I made it look like this as opposed to the way the indicator normally looks, and how to make it to where it's the only thing on the chart. There's no candles from, whatever market you're looking at above. It only has that. And then a couple other modifications. So I walked through step by step how to set it up, and then some signals so that you kind of know what I'm looking for through the day. This happened last night. This is the FXI. It's a country ETF. We use this for people that don't want to trade in the currency pairs, right? US dollar, China. If we do go to US dollar, China, you can see that it's taking off to the upside. The ETF is an inverse product of this. So if the pair is going up, the ETF would be going down. Same thing with on Friday, US dollar, Japan had that defense come in. The BOJ activated their defense, and this went down. So of course the ETF XLI went up. a massive move too for such an ETF that barely moves. Before we get into looking at the ES today, do what we normally do, stop by here. We're on Thinkorswim looking at the calendar. If yours is really cluttered, say it looks like this, it's got all this extra junk all over it. Easiest way to turn all of that off and kind of get it cleaned up is just to turn everything off and then turn on Econo Day events. You can change the location of where these columns are at. I like to just set the description next to the time so everything is nice and clear. We do have additional auctions today, and the market got a little bit of a boost last week when the government reached out to some of their biggest treasury market makers and asked about buying back treasuries. Just the discussion of that caused a little bit of a bump to the upside, right? And they're talking about maybe cleaning up the back end and putting out some liquidity on the front side again. It's not completely unprecedented. They've done this before. We'll have to kind of see how it goes. These auctions are a big deal to me. I watch them every time we have them. I know they don't get the coverage that other places give to, like CPI and things like that, but to me, midday reversals are where I make a lot of money, and I spot the potential for those reversals just by understanding that we might have an auction today and starting the day looking to see if we do have any of those auctions. All right, I know this is a very cluttered chart. It's got a bunch of stuff all over it. But we'll just do it a little bit at a time, kind of try to clean things up, zoom in a little bit. This is our expected move for the week. If we were to, kind of game that out, look at the size of it, it's going to be on average around 120. That's what it's been going. This label here in the upper left is not accurate. That's last week's. But that's kind of the size of it. Now, we've been moving this far on a day-to-day basis, so the weekly expected move hasn't been a real useful tool in the current market environment. But I wanted to point out, look how much it changed from last week to this week. Let's just go in and turn everything off here for a minute, except for that. So this is the size of the box this week. That's the size of the box last week. Think of these boxes as volatility and, like how much of the piece of the pie are we going to get? This is a very large chunk of pie right there, right? Pie, cake, cookies, I don't care what you use. That's a very large amount of something. This week, it's greatly decreased. Well, I don't know. You guys feel like risk has abated? Are you feeling frisky? Want to go out and buy a bunch of junk? Probably not, right? It still feels very risky out there. There is a lot of risk. There is a lot of volatility on a day-to-day basis. Price continues to make erratic and very violent price moves, right? Look how far we moved on Friday, 3.5% from high to low. It doesn't feel like a low volatility environment, and yet they cut our volatility in half from last week to this week. This goes directly to options traders, right? Because you're going to be the ones most affected by it. Another metric that I wanted to look at this morning is how far away from the 10-period moving average are we? Think of the 10-period moving average as the start to everything. It's the center of the basketball court. The 10-week and the 10-day are both very powerful. They're used all over the place. IBD, for an example, has a lot of their metrics based off of the 10-week. We are very close to crossing through the 10-week, and we haven't done that since the July-August rally. Right? Wasn't that a beautiful rally? A lot of people that I talked to said, I didn't get to trade any of it because I didn't trust it. And by the time I did trust it, it already seemed like it was too late. I get it, right? So I'm not saying that that this guarantees we're getting it, right? There's no guarantees in this market. But I've been calling this the new low for over a week now. It's not the low. I don't think we're done with these lows, but I am looking for another bear market rally like we had after we based in June, started running in July, and hit our head on the 200 in August. It's just another bear market rally, right? First we base, then we run. Well, the basing has a lot to do with us getting to that 10, because even if we didn't break out of this range that we've been in, each week that 10-week has moved closer to us. So we're looking for that crossover to begin. Above the 10-week, we're just naturally bullish, right? We would want to look for new long opportunities. We'd want to defend our longs, not be piling into a bunch of new shorts yet, all that good kind of stuff. So that's the 10-week. And we look at the 10-day. This one is kind of giving us a little bit of a warning this morning. So the average reversal when we've been above the 10 is around that 3% mark. And that means we were around 3% farther, above the 10-period moving average. That seems to be the spot where this market tends to pause, consolidate, turn around, fall back towards the 10. Price doesn't like to get too far away from the 10, but, quote, too far is what we're trying to solve here. Every market has a different distance that it considers to be too far from the 10. And I built this indicator so that we can load whatever market we want and see, well, where's the natural turning point for this market? For the ES, the natural turning point is around 3% on the top side. All right, so the concern here is that we're kind of getting to that point where we start getting the risk of a pause or a consolidation. And this week, when we've got some of the biggest market cap names having earnings, those two points of view don't line up, right? This thing says we need to take a pause and or reverse back towards the 10 to cool off a little bit. And earnings coming up says we're about to make a real big move. So here on the daily chart, when we've got nothing else on here, There's that 10-period moving average. Now you can see that there are periods of time where we've gone more than 2%, more than 3%. It does happen. I'm certainly not saying that it doesn't. It's just what we're looking at is what's the average distance that it gets away before it pauses and comes back and retests. There's usually a critical turning point where it's reaching it's just had enough, and it tends to pause, consolidate, reverse, and come back the other direction. So we had our 10-period crossover last week. A nice move to the upside. We're not overextended yet, but that's what I'm kind of putting out on the table is if we get another 1 or 2 days like we had, say, yesterday, then we're going to be reaching the edges of how far away from the 10 we want to get. We'll be looking for that flip back. All right, looking at the volume this morning, we're basically in line. It's not too high, not too low, and that's really all we use this for. If it was really low, that would be concerning. It'd get our attention. It would show the market's waiting on something. And if it was really high, that would also be concerning, kind of be an indication that something already happened or something is happening right now. And it's neither one of those, so it's fine. This thing takes up a lot of real estate, so kind of want to get it out of the way as quickly as possible. You look at it and see that it doesn't have no signal, just turn the thing off, get it out of there. Like with most indicators, most of the time, it's not giving you a signal, which means it's just clutter and noise. So this morning, we had an inside day breakout at the open last night. We reset that, resolved the liquidity vacuum, and then kind of counterbalanced the other direction for the same amount of distance, no less. Now we're back inside the starting point from last night. Still inside day breakout. We want to focus on this as two different zones. The top half of that zone and the bottom half of that zone. And below that, we'd focus on the rest of yesterday, right? From the lowest point of yesterday up to the bottom of our Globex. 3 zones, 3 trading zones give you the ability to kind of lay out your levels, trade from pivot to pivot. Let's see what else we got. All right, so the retrace levels are still there. We have new ones now because of Friday. The 50% retrace lines up with the daily pivot, which we have not yet hit, which means we've got an MDP, right? Missed daily pivot. We're above last week's pivot. We're above today's pivot. We are back inside this liquidity reset, our Globex IB. And we're outside of yesterday's price action. When we're outside of the previous day's price, we have the capacity for a trend day. Now, I had people asking me if Friday was a trend day. It was trendy, but it doesn't qualify as one of the 4 trend days with, the little, this is one of my trend day checklists. Having trend doesn't mean the same thing as having a trend day. A trend day is a unique characteristic, like a flag is a unique characteristic, or an ascending wedge, or a head and shoulders. Right? It has rules to it. And if the price action that you're looking at doesn't meet those rules, then you can't say that it was a wedge or a flag or a head and shoulders. Yes, Friday's price action had a really nice trend to it, but it wasn't one of our trend days because it was inside of the previous day's price action. So we need out of that zone. Today, we already are out of that zone, but now we're still inside of our own Globex range. You can't have a trend day if you're not trending, and if price is sitting in the same location as it was 8 hours ago, 10 hours ago, well then we're not trending. We didn't go anywhere, right? That's a range. So for the trend day today, if we're going to get one, we got to get through the cog line at 38.11, call it our Globex high, and begin making moves to the upside. The ADR half is 38.23, and the ADR full is 38.75. We do have some levels here thanks to the Thinkorswim Quant tool. I didn't get that lined up perfectly, but it'll do. So 38.34, 38.55 is some minor pivots to the upside. And our 200 lines up, the bottom lines up perfectly. So we don't even need that one. Now when I come out to this higher time frame, this critical pivot do not remove box, we're coming to the top of this box. And the market's had a hard time getting out of this. I've heard it called all kinds of things, but I kind of like, Don calls it the hurt locker, volatility box. I like that image. It certainly is a critical resistance, a critical pivot all the way around. We're looking on the year right now for this to be our base and for the start of a new leg up, right? A new bear market rally. We have to get a higher high this week. Or, I mean, at some point, right? So, we're looking for that breakout level. Just wicking up there, though, doesn't really do it for me, right? We need a solid close above that critical pivot level, 38.19. All right, should we reject there, start playing the levels all the way back down, there's a pretty wide open spot from yesterday. The liquidity gaps that it left behind, there's not going to be a whole lot of help. And the pivot points like cash open, Globex high, Globex low, RTH low, they're all a long ways off, right? So they're not going to be very useful. Day 30-minute volume profile. You can see we're outside of the box. When we're outside of the box, we have every expectation that we're going to come back in the box. We've spent literally no time at the top, and there was no volume up there either. Not a surprise. We have a very minor amount of support around that 37.65 area. It's very minor. I wouldn't lean on it like it's any kind of handrail, no trust, right? Like maybe first touch, but we've gone through this a few times. So now I would say that it has lost all of its validity, and I wouldn't trust it to hold anything. If we do continue to make the move to the downside, though, we do have the point of control at 36.85. that could provide a little bit more structure, right? Like it provided back here between Wednesday and Thursday. All right, I do have a minor pivot from the FOMC day. It's one of the open, high, low, close lines from back then. We're coming into that literally right now. We don't have any points of control or VPOC to carry forward. Some old ones, but they're a long ways off. 38.76 is the next one that I've got to the upside, and that's not a VPOC. It's another FOMC open, high, low, close pivot. 38.92 is the next VPOC to the upside. It's a long ways off. All right, these are the top 20 names in the NASDAQ. By market weight, they cover more in these 20 names than the other 80 combined. And if you notice, it's basically the monsters of tech kind of tucked in there as well. I got all these set to a 1 hour. And of course, you know, with the pre-market and everything, it'll do a lot better once we get into the open. But looking at change this morning, let's take a look at Tesla. Tesla's down 2.2%. Interestingly enough, the market didn't take a gut punch from that. And Meta's down 1% this morning. Now, Meta or Facebook has a market maker move this morning of nearly 11.5%. Kind of implying that Facebook has the capacity to make like this massive outsized move today. It almost makes me think that there's something wrong with that market maker move math. Maybe there's a little glitch in there this morning or something. Let's go look at the options. Volatility can't be that whack. Yeah, it can. Okay, well, there you go. This isn't a scan, it's just a physical watch list. I took the top 20 names out of the NASDAQ and I typed them into this list. Right? Thinkorswim gives you, if you go to public, you can sort by whatever. There's the NASDAQ 100. So I loaded the NASDAQ 100, put market cap in there. And then from the market cap, that's what I sorted it from high to low and just picked the 20 names on the list, top 20 names on the list. The article that I wrote for that C-Tick is on my website, OAC Coaching. So if you just Google OAC Coaching, it should pop up on the website. You can use the search bar. I think it's in the middle right-hand side of the page. So a pretty significant move is implied from the options on Facebook. Got Amazon making breakout moves today. It's at 120.72. So it closed this gap that's been on the books for a while now. This box isn't going to be as clean as the one that we've got on the S&P, but it stands to be the same thing, right? That we were just talking about this box. So here, you're going to find it on Microsoft, Apple, Amazon, the whole group. This morning, we're already up to 120.70. So we're above this cyan pivot point, which is the gap close, which is kind of nice because that provides us with a pivot point, right? When we come into the open, we don't want to see Amazon fade below this level. So that ought to be our new support. What I will stress with caution is a gap up failure play, right? Where it gaps up and then rolls over and dumps on us, kind of like this day here. The reason that candle is shaded green when these other green candles are hollow is because when we closed there and we opened there in a strong gapped up move and we fell all day long. But we closed higher than the previous day's close, so it means there was a green candle. But they shaded that candle in to show that, hey, it might have closed green, but it went down all day. So just because we're gapped up crazy bullish this morning in Amazon, it still has the 123 price pivot that it needs to get through. Otherwise, it's going to reject and dump back down. In that rejection on the dump back down, use the 120.3 as a target. If we get below that, then we'll use the close from Friday. And then below that, we'll use this channel bottom, 118. All right, so we've got some pretty decent pivot points on Amazon, no matter which direction it wants to go, up or down. And the good thing is we don't have to assume which one it's going to do. We could just let it do it and trade it. So we're looking for the breakout failure and then hitting all these branches on the way back down, or a breakout continuation, which will get us above that 123. We do have another gap that needs to close. So if we do get above 123, we'll focus on 126. That'd be the next target, right? Because that's the next kind of like a gravity. I don't want to call it a gravity point, but it'd be the next pivot. All right, Microsoft is right behind that. It's up nearly 1% this morning, 244.50. So, yeah, not by much, but outside of the box, right? It's above this highest pivot here. And yet we're underneath this pivot. All right, so that's going to be the target this morning, 246.79. That'll get the gap closed. And again, the concern is that we open up here, we hit our head, close that gap, and then down we go. Now, I don't know that we're going to get that rollover and down we go, right? But that's my base case argument, because it's the top of the box in too many names, and we're getting too far away from that 10, right? So it kind of lines us up into that, quote, we need to pause spot. closing the gap and then rolling over and dumping down through a support level would make sense. If we do get above that 246, then the target will be 250, 250 half. On the rollover, if we reject off of the 246.75 up here, we'll focus on that rollover. The only pivot that we don't have marked would be Friday's level. That'd be one of the pivots we would expect to react with on the way back down. All right, Amazon, Microsoft, Google. Yeah. So Google, another one of the monsters of tech, opened, looks to be opening near 1% this morning as well. Right now, it's at 102.17, which puts it above Friday for sure, but not enough, and not above Thursday's level. It needs to get above that, then challenge that gap up failure day. So 103 and then 103.94 overhead pivots. We do have Friday's close now as a support level underneath us, and currently price is sitting, in there somewhere. 102.40 ish. So the idea is, we come into the open, we fade down, find support, bounce and rip. Or we come into the open and we rip like a mad demon into one of these resistance levels, and then we dump. One or the other, right? And again, don't try to guess which one it is. Just let it unfold. And hey, if you're a scalper, play both sides, right? Run it up and then flip it over and run it down. Apple's barely moved at all this morning. It's up 0.25%. Not really enough to excite any fires, right? But it is above this pivot point. So this morning, even though Apple hasn't gone very far, it went just far enough to get past this level. And I'll mention there's nothing up here, right? There's no pivot to hit. We do got this gap that needs to close. And again, these hollow candles tell a story, right? Most of my candles are filled in the red. This red candle is not filled in, it's hollow. The reason that it's hollow is because we gapped all the way down and opened here, and we ran up all day long, and we closed at the top of that candle. But it was still a down day because we closed lower than the previous day's low, right? So to close that gap from candle close to candle open, then we need to get back up to 149.84. And if we continue to push this morning to the upside, that's exactly where my target would be, right? From there, we've got another gap that needs to close at 152.24, but that's too far away unless we get like a freaking rocket ship today. That would be Apple making another 3.8% move. And it's done that, a number of times recently, but this close to earnings, I just find it hard to believe that it's got the mojo to get it done. So if we reject and start dumping back down, the pivot points we'd play, we've got this close, or excuse me, the high, 145.98. We'll call it 146. 146, 145, 144, basically. No reason to split hairs, squabble over pennies. So now you get some lower pivots and some upper pivots. Remember, we're this close to earnings, I would anticipate that this doesn't really rock and roll all that much, right? I mean, the earnings this week are like the most pivotal thing that we've got. And other than the currency war going on, this is like the number one focus out there. All right, so the US dollar Japan kind of took off above that 145 and it ran for a week. And then on Friday, that defense, pretty amazing actually, was one of the two catalysts that ripped our market to the upside on Friday. Just that overwhelming, massive run that we had. Really pretty beautiful. So the currency defense was part of it. The Wall Street Journal article mentioning the Fed whisperer and some intonation of a Fed pause or a pivot was the other thing Friday. They gave us that rip to the upside. And it was kind of funny in the later part of the day, everybody was saying, okay, well, that kind of took care of Japan. What's the next currency to get whacked? And the consensus seemed to be that it was going to be China. Sure enough, over the weekend, China had its CPI numbers. Everything's like a week late. They were dealing with some political event that lasts like a week. So their economic data is coming in late, but it came in last night, and it was not what people wanted to see. Started to watch the currency pair rip to the upside here this morning. You got to kind of believe this is going to be the next one to get defended. And if we see that, we're very likely going to see another gut punch in the dollar, maybe getting it below that 111.5. And we're likely to see the ETF for China, FXI, rip to the upside because it's been going down pretty significantly. So that was the move last night. Not overly liquid, right? And you can see where the institutions are at. They stand out really well. I mean, the bid-ask spread, considering the size of this product, that's a little big. It's about a dime, but it is penny increments. There is a little bit of liquidity on the front end. I'd like to see how the morning opens, but this might be viable for an opportunity to play today. Just on the idea that, if they start defending, and we start to see the US dollar China take a punch to the downside, that ETF is likely to try to close that gap and move back up. Oil volatility has continued to go down. It's right here. It's kind of freaking me out a little bit. I would watch for 50 as kind of the line in the sand, looking for a breakover and kind of a trigger back up through all of these volatility levels back towards 60. I can't stress it enough today, guys, that it's very likely going to be a continuation of the currency war and Yellen. Really keep your eye on the market when she comes in talking. And that FX, not FX, but finance juice, that's a really good site to use for that stuff. I know there's better if you're willing to pay for it, but that one's free. And Trade Flash, for those of you who don't know what this thing is fueled by Hammerstone. And if you was to go get a Hammerstone account, it's like $400 a month or some crazy number like that, right? But this is free. Now, of course, you get what you pay for. You're not getting a full Hammerstone access, but you are getting some really detailed, really amazing, and insightful material, actionable material in a timely manner. Just turn on your Trade Flash. You can put your own symbol in and point it to things, but I never do, right? I just leave it open so that whatever's going on shows up in there. And it'll put all kinds of stuff, unusual options activity, economic news, events, rumors, buyouts, halted markets, whatever they deem relevant to the market, they put it in there. And I say they because from what I understand, it's actually a group of traders hanging out together, and those individuals are deciding what comes in here. They post it in there. Watch that 3,800 today, and we open up with the market slightly bullish this morning. It would be a part of that discussion on the pump and dump, right? That island reversal, mid-morning reversal, where we open gapped up. Here's a great example of it. So we open gapped up, hit our head, and then dump right back down. I know that this is a really hard thing to see. It's just so cluttered. But there is a yellow line in there. And that yellow line is a trend spider moving average from a higher time frame. We're nearing the top of this, the top of the range, top of the zone, right? As a bounded oscillator, it's not going to continue to give us higher highs, and it's going to have to give us a reset at some point. A reset would be that it dumps back down like it did, say, between that Wednesday and the following Monday. It took, a a few days to the downside before it started to stabilize and come back up. We're at the top of the zone. This is one more thing that is telling us this morning we could get that fake breakout, that jump to the upside, then we hit our head and dump back down. And we're not talking about a significant dump down, right? Not like days and days, a new bear market rip, massive candles. It's not looking like that at this point. But we very well could come back down to the bottom of that channel, that 3650 area. So from 3800, hit our head, turn around and dump, cycle back through this zone, and end up around that 3650, 3640 area. If we do get above 3800, that would be the start, the valid check for another bear market rally like we had back here, where we were in the box, struggled and struggled and struggled, and finally broke out and had that nice little rip. 6 weeks. All right, we're looking at the S&P 500 because it won't let me look at the S&P 100. We use a filter to get it near 100 names. It's not perfect. I think I got 91 showing. It's close enough. And you can kind of see the monsters of tech. They stand out. They're the really big boxes. Amazon, Microsoft, Google, all up more than 1% this morning. Apple sticking to the story. It's up, but more flat than up, right? It's only up, a little bit this morning because it's got that earnings, and I really don't think anybody wants to gamble with it, right? They want solid information before they size up another trade. Good morning, puppies. My puppy is like a banker, sleeps in, slacker. Tesla being down kind of fits with our argument that we could bump our head this morning and roll over and dump. And I'll also contend that this is a really big divergence. And when it comes to divergence, one side is wrong. One side's going to have to play catch up. So either Tesla flips and rips, or the rest of the monsters of tech whack its head and dump down. That fake breakout fast failure. Well, that's a phrase that I'm still trying to pick up. I struggle with saying it, but fake breakout fast failure would bring us back down to that 3650 area. And everything that's lining up this morning, we've got Tesla and Facebook both down this morning. So some of the monsters are down, some of the monsters are up, and then we've got some that are flat. I say it's got to be resolved, right? One side is wrong, and it's going to play catch up. So through the morning, when you're looking to resolve this which one is wrong question, watch the NY Fang. This is what we use for the monsters of tech. And then watch the financials. KRE is what I like, but XLF is fine, I guess. Tie those two in with the cumulative tick, what's going on in the total market space. All of those are either just regular everyday indicators and nothing custom about them, or they're public on the idea that I'm not here to sell indicators or yeah, I'm not selling screw that. So if it's open source, I'd just give it away. That's the whole idea. You'll find these indicators and these chart setups in the Thinkorswim Discord. And that's what I got, guys. Be careful, be safe. I will see you all tomorrow.
Recording.